Let me ask you this. Are you losing sleep over whether you should register for VAT? Worried about crossing that 90,000 threshold? Or maybe you're just confused about the whole process and don't know where to start? Well, you're in the right place. By the end of this video, you'll understand exactly what VAT is, who needs to register, when to do it, and most importantly, whether it makes financial sense for your specific business situation. Now let's get started. Let's start with the basics. What exactly is VAT? VAT stands for Value Added Tax, and it's essentially a consumption tax that's added to the price of goods and services. In the UK, the standard VAT rate in 2025 is 20%, though there are reduced rates for certain items. Here's the interesting part. While consumers ultimately pay this tax, businesses act as the tax collectors for HMRC. That's right, you become the government's unpaid tax agent. Now, who actually needs to register for VAT? The law says that if your taxable turnover exceeds £90,000 in any 12-month period, you must register within 30 days. Taxable turnover includes the value of anything you sell that isn't VAT exempt. But here's something many business owners don't realize. You can voluntarily register even if you're nowhere near that threshold, and in many cases, it might actually benefit you financially. We'll get to that shortly. I know this information can be really valuable for growing your business the right way. If you're finding this helpful so far, please hit that like button. It really helps the channel reach more entrepreneurs like you. And if you haven't already, subscribe for weekly business tips that could save you thousands. Now let's walk through the actual registration process step by step. First, head to the gov.uk website and search for Register for VAT, or simply use the direct link in the description below. For limited companies, you'll need your company registration number, your UTR, unique taxpayer reference, business bank account details, and information about your turnover and business activities. If you're a sole trader or partnership, you'll need your national insurance number, some ID like a passport or driving license, your UTR, personal bank details, and of course, information about your business. The registration process happens online through your government gateway account. Don't have one? No worries, you can create it right then and there. The form will guide you through all the steps. Once you've submitted everything, HMRC will process your application. In 2025, this typically takes about 10-14 working days, though it can stretch a bit longer during busy periods. When approved, you'll get your shiny new 9-digit VAT number. This is super important. You'll need to display it on all your invoices going forward. You'll also receive details about when to submit your first VAT return and how to set up your business tax account. Now, let's talk about something that can save you serious time and money. Choosing the right VAT scheme for your business. The standard VAT accounting scheme is what most businesses use by default. You charge 20% VAT on your sales, reclaim VAT on your purchases, and pay the difference to HMRC every quarter. It's straightforward but can be admin heavy. But did you know there are other options that might be better for your specific situation? Take the flat rate scheme, for example. This is perfect for businesses with a turnover under 150,000. Instead of tracking every single purchase and sale, you simply pay a fixed percentage of your turnover to HMRC. The percentage depends on your industry. For marketing agencies in 2025, it's around 11%. This can not only save you hours of bookkeeping each month, but it might actually leave more money in your pocket. Then there's the annual accounting scheme. With this, you make quarterly payments based on estimates, but only submit one VAT return per year. Imagine only dealing with the VAT paperwork once instead of 4 times. This won't necessarily save you money, but it can definitely save you time and stress. And my personal favorite for service businesses with slow-paying clients, the cash accounting scheme. With this, you only account for VAT when money actually changes hands, not when you issue invoices. If you've ever been in the position where you had to pay VAT to HMRC for an invoice your client hasn't paid yet, you'll understand why this scheme can be a lifesaver for your cash flow. Now for the question I get asked most often: should you register for VAT voluntarily if you're below the threshold? This isn't a simple yes or no answer, and anyone who tells you it is probably doesn't understand your specific business. Let me share 4 key benefits that might make voluntary registration worthwhile for you. First, you can reclaim input VAT on your expenses. I was working with a tech startup last year that had spent around £10,000 on equipment, software, and services to get their business off the ground. Once we registered them for VAT, they were able to claim back nearly £1,700 in VAT they'd already paid. That's like getting a free MacBook Pro just for filling out some paperwork. Second, the flat rate scheme can be surprisingly profitable for some businesses, especially service-based ones with few expenses. I have a client in the consultation space who effectively makes an extra 3% profit margin just from being on the right VAT scheme. It's like finding money you didn't know was there. Third, and this is a little-known secret, pre-registration VAT recovery. You can actually reclaim VAT on goods purchased up to 4 years before registration and services up to 6 months before. I had a client who recovered over £3,000 this way. HMRC doesn't advertise this one for obvious reasons. And fourth, there's the credibility factor. Being VAT registered signals to other businesses that you're established and professional. I've literally seen situations where larger companies refuse to work with suppliers simply because they weren't VAT registered. It's not always fair, but it's the reality of business perception. But I wouldn't be giving you the full picture if I didn't mention the downsides. Your prices will effectively be higher for non-VAT registered customers who can't reclaim the VAT. This could put you at a disadvantage compared to smaller competitors. You'll have more paperwork and compliance requirements with those quarterly VAT returns. While accounting software makes this easier, it's still another thing on your plate. And yes, being VAT registered does put you on HMRC's radar more prominently. That means you're more likely to face audits and inspections down the line. Here's my advice from years of helping businesses with this exact decision. Take just 1 hour to do what I call a VAT evaluation. Look at who your customers are. If they're mostly VAT registered businesses who can reclaim the VAT you charge them, registration probably makes sense. If they're mostly consumers who'll see your prices go up by 20%, you need to think harder about it. Also, take a look at your expense. How much VAT are you currently paying that you could be reclaiming? For some businesses, this alone makes registration worthwhile. So you've taken the plunge and registered for VAT. What happens next? You'll need to start charging VAT on your invoices and displaying your VAT number on them. This is non-negotiable. HMRC is quite strict about proper invoicing. You'll need to submit VAT returns, usually quarterly, through Making Tax Digital (MTD) compliant software. Paper returns went the way of the dinosaur years ago, and in 2025, digital submission is the only way. You'll need to keep digital records of all your sales and purchases. Most businesses use accounting software like Xero, QuickBooks, or Sage for this, but at the very minimum, you'll need specific spreadsheets that connect to HMRC's systems. And of course, you'll need to pay any VAT due, typically 1 month and 7 days after the end of your VAT quarter. Here's a pro tip I give all my clients. Set calendar reminders for your VAT deadlines. HMRC penalties for late submission have been tightened in 2025, and they can add up frighteningly quickly. Before I wrap up, if you're looking to set up your UK company within 24 to 48 hours, let First Formation do everything for you. I've partnered with them to get you a discount of up to 33% off the Prestige package, 45% off all-inclusive, and a new price for their non-resident package that includes VAT registration and everything else you might need. The company's official website link is in the description below. Why wait? Get started today. So there you have it, everything you need to know about UK VAT registration in 2025. Remember, VAT isn't just a compliance issue. It's a strategic business decision that can significantly impact your profitability. If you're approaching that £90,000 threshold, make sure you're monitoring your turnover regularly so you don't miss the registration deadline. And if you're below it, take the time to evaluate whether voluntary registration makes financial sense for your business. Still feeling overwhelmed? That's completely normal. Tax can be complicated, which is why working with a qualified accountant is often the best investment you can make. They can help you with that VAT evaluation we talked about and made sure you're making the right decision for your specific business. If you found this video helpful, please give it a thumbs up and share it with any business owners you know who might benefit. Don't forget to subscribe for more content just like this that helps you navigate the complex world of business and tax. Thanks for watching, and I'll see you in the next video.